Hey guys, Akil Stokes here. Welcome back to another Trading Edge video. If you guys are seasoned followers of the channel, thank you as always for supporting what I do here. If you're brand new, welcome. This is a weekly video that I do on the weekend, sharing with you the top trading ideas that are on my radar for the week ahead. And of course, sprinkling little trading lessons in there as well. I try to find a nice little blend between keeping it as simple as possible for the newer traders, yet making sure it's full of value for the seasoned vets as well. Speaking of trading lessons, I just put out a video on Friday sharing with you a nice trading lesson on the CTS system. So make sure you put that on your watch list after this video if you haven't done so already. And while you're watching the video, do me a favor, hit that like button. There's a lot of content on here. I love doing it. And the best way you can support me and make sure I stay motivated so I keep on doing it week after week is to hit that like button. So go ahead and do it. Do it now before you forget. I'll give you time. I'm stalling. Have you hit the like button yet? If you haven't, shame on you. If you have, you are awesome. So we have a lot to look at in today's video, including a viewer request. I guess you can say it. Someone reached out and said, hey, Keel, what's your opinion on this? So I'm going to share it. We're going to start with the viewer choice, which was the euro dollar. And I responded to this trader on Instagram saying, one, I wasn't in front of my charts because it was the weekend, I was on the road. But two, there wasn't really too much I was interested in on the euro dollar. This trader was looking at it from the daily and went all the way to the 15. And also mentioned kind of looking at the pound dollar for a comparison. And I wanted to bring this up for two reasons, because there were two things that I disagree with this trader's analysis. And again, not that I have to agree with your analysis, not that anyone has to agree with anyone's analysis, but just in general from a teaching perspective. One was kind of the variation of time frames, right? I personally believe in kind of keeping a maybe like a 3 time frame setup if you're doing top-down analysis or multiple time frame analysis. And just venturing all the way from the daily to the 15 is a long way to go. I think that kind of tiptoes on the line of like forcing trades, meaning like you start on a daily, I don't see anything. I go down to the 4 hour, I don't see anything. I go down to the hourly, I don't see anything. And then like you want to see something, so you keep going down to the 30 minute, to the 15, to the 5. And lo and behold, you end up on the dreaded minute chart, which if you're new to the channel, don't ever go to the minute chart. Don't ever go there. Horrible. Stay away, right? If I can give you a warning in my best like ghost voice, right? So I don't think what's happening on the 15 has much to do with what's happening on the daily at all. And again, as traders, you're welcome to set up your own kind of progression, but just make sure it is rules-based. So the one lesson is I wouldn't use the 15 and the daily together. I would have a stopping point. For me personally, the hour is as low as I go if I'm using the daily chart, as my higher time frame. Second of all, and this is the one that I think everyone should agree with, is that there's no reason to base our judgment on the euro dollar off of the pound dollar. There's tons of podcast episodes, there's tons of videos on this channel where I'm like raging about correlations and like ripping faces off because I'm so angry. But I'll make it simple. I won't get violent today. It's a Sunday morning. Got to take the kids to church soon, right? Here's the thing. The Forex market specifically is unique. There are correlations, there are pairs that move the same, there are base currencies, major currencies, weaker currencies that move together. Similarly, when there are certain news events that come out, there are correlations between metals, oil, and different currencies. But the unique thing about the Forex market is that we trade in pairs, and pairs are direct battles, direct matches between the two currencies. So with the euro dollar in particular, it is the euro versus the US dollar. The pound dollar, it is the pound versus the US dollar, right? There's no reason to make judgment off of what the euro dollar is going to do based off what the pound dollar has done, right? They're their own individual battles. The pound dollar has absolutely nothing to do with the euro dollar. So we don't want to venture into those worlds like that to kind of guess about what's going on. And the trader said it himself. He said, I'm getting analysis paralysis. And one of the reasons for that is, one, we're going through so many time frames that we're confusing ourselves with multiple ideas. Two, we're trying to judge what's happening on one pair off of our opinion on another pair, and that just makes everything confusing. So, you got to avoid that analysis paralysis. You got to stick to a consistent method, and that's your best shot at becoming a consistent trader, right? So, all right, let's hop into the euro dollar. I'm going to stick here on the daily because, again, there's not too much that interests me on the lower time frames, but on the daily, this is interesting, right? In the midst of all this kind of gapage and consolidation, we have, lo and behold, an advanced pattern formation. Good old steady Freddies, I call them, right? I got a message the other day over here. I'm not going to show it. I'll try to keep it private. But a trader saying, hey, Akil, just want to warn you. That stuff you used to trade doesn't work anymore. And you should stop and try this new trading style because of blah, 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 blah. I'll tell you this right now, right? I've been trading for 18 years now. These things still work. Right? They have worked when I first started trading. They were the first strategy that I started trading because I was all over the place and I needed really kind of guidance and structure, no pun intended, to my trading. They work now. They are boring. They are repetitive. They're not flashy in my opinion. Maybe that's because I've been with them for so long, but they get the job done and they form frequently. And I call them my steady Freddies because between all the other stuff that I'm doing in my trading, these things are just very consistent and they just make money. It's a good kind of balance to the rest of my trading portfolio as far as strategies goes. So what we have here on the euro dollar is going to be a Gartley pattern, right? These are called advanced pattern formations or harmonic patterns, right? And I'll walk through the legs, right? So the first leg, their starting point is going to be our X leg, which is going to be right here, right? And in this case, it's going to be a potential, or it is a completed bearish Gartley. So our first leg is going to be a swing high to a swing low. This is going to be our A leg down here, right? Our next move up, here we go, is going to be our B leg, right? This needs to come to a 618 Fibonacci retracement, right? And I'll draw those in later, just trying to save time here because I have the feeling this is going to be a long video already. Then we have another retracement in here, or a failed extension. You can look at it as that's going to be our C leg. This also needs to come to a 618, and I promise all these measurables will make sense. And then what I'm looking for my D completion is a 127. So let's draw up the first couple legs first. Fibonacci retracement tool from the swing high to swing low, X to A. Does that B hit the 618? Check, yes. Fibonacci retracement from my swing low of A here to the, Fibonacci retracement, there we go, from my swing low of A to the top of my B leg. Does our C leg hit the 618? That's the red line on your screen. Check, right? And then for the completion point, there's different ways to do this. The way I personally enjoy is to use a 127 extension, so Fibonacci extension from my A leg up to my B leg and back down. And you can see that we have a 127 up here, and the zone of that 127 to the X leg is going to be your D completion. That's where you sell, either right at the 127, or if you're looking for a particular reason for entry, if price action enters that 127 zone, then you look for whatever you need to sell within that zone. So we have a nice bearish Gartley here completed. I will tell you this, it is not at market anymore. So if you wake up, if you wake the markets up, or wake up markets on Sunday and trade this right away, you are entering late. But we know these things, weird things happen over the weekend. These things can push up, it could push down. If you do get another chance to enter, if price were to go back to that original entry point, this could still be a selling opportunity for you. I don't see much going down on the 4 hour. I don't see much happening on the hourly. There's not really much happening on the 15, so that's what I have on euro dollar. And I love the viewer request. Feel free. I do not mind talking about these things in videos. I love talking trading. So if you ever have something over the weekend that you want to talk about or check up on, shoot it to me and it may make the video. Next up is going to be the pound Aussie. And this is going to be an interesting one, right? Again, we're seeing consolidation, right? The market is moving sideways. For you guys that are brand new, if price is going from bottom left to top right, uptrend. If it's going from top left to bottom right, downtrend. There are specific rules, obviously, to identifying trend, but if you start at the basics, let's use like little kid common sense. If we're going upwards, it's up. If we're going downwards, it's down. If we're going sideways, it's sideways. Consolidation. So we're in consolidation here on the pound Aussie, and I want to go down to a 4 hour. Well, first of all, you can see kind of a recent shelf that we've come to, right? This is a little bit hard. I can pick this out because I spent way too many years in the market. But you see the wicks up here on these two candles, right? These long wicks, right? Those are rejection zones. So price pushed up and it got beat down. Those going to a lower time frame are going to be structure shelves, and we'll see that as we go down to the 4 hour, right? You can see a nice little structure area right here, nice little structure area right here. I don't know if we have anything looking left, not much else, but you can see that price action, I'll draw it out with my lines, made moves like this, right? we came down, we did a dance here, we came down, we played around, consolidated here, ended up breaking lower, came up, tested it again, ended up going higher, right? This is a head and shoulders pattern, right? Left shoulder, I'm having a horrible time drawing, guys, sorry. Left shoulder, right shoulder, head right here. You can see that we're coming right back down to that same level, and I would expect that to be another decision point, another point where the market has a think, especially coming off this big run of red candles, right? So a chance to play some relief. We're going to talk a little bit about that next, probably, I think, with gold as well, about relief and how to take advantage of it. But you can see that price has sold off. A lot of these sellers are probably going to be profit taking around this area because I'll tell you what, if I were a seller, this would be an area where I'd be like, I want to get a little money in my pocket because it's been dangerous here in the past and I don't want to let my good trade go to waste. This is an excellent opportunity if you're looking for a short. I'm looking at the microphone, sorry. There we go, camera. This would be an excellent opportunity as well if you're looking for a short-term bullish counter trend trade as well. I'm used to do this with the camera off, guys, so I'm like, whatever. So let's go down one more time frame to the hourly. And again, you can see that price action has come to our previous level of structure support, right? Going back to the CTS video that I gave you guys on Friday, watch it, right? You can see we can add some things to that as well. One of them being the RSI being massively oversold. Traditionally on the RSI, oversold starts at 30. I have mine's a little bit lower because I like to look for extremes. So mine is at 20. RSI is actually down at like 12. So what that means in technical, complicated math and sciencey terms is that we are very oversold. Yeah, I've got 2 degrees, guys, and that's what I've learned throughout those 2 degrees, to say massively oversold with complicated math and science. God bless my student loan bills. I don't have them anymore. They're paid off, but yeah, at the time, sometimes I ask myself, like, why the hell did I pay all that money for school? Or I should have invested that in my training, in my trading, and had a lot more to start with. But whatever, everything happens for a reason. Anyway, so this is an excellent place to look for a bullish counter trend trade. Obviously, we want to be predictive in our analysis, reactive in our execution. So we want to predict that, hey, this level might hold, but we don't want to buy yet. We want to wait for the market to give us a reason, give us more confirmation, more proof that what we think is likely going to happen on the chart. So we need to be patient, right? One of the 10 values from our 10 value podcast. And if we do bounce up, I expect this to act very similar to what we did before, right? The market is kind of weird as it likes symmetry, right? So again, we had this head and shoulders here in the past where we had left shoulder. We had, gosh, I'm struggling with my mouse today. Left shoulder, right shoulder. We have the same thing kind of setting up here. Well, price is coming up. We have a left shoulder. We have a head. We're coming down here. Would not be surprised to see a symmetrical move up like that to give us a move to our right shoulder. So short, sweet counter trend trade here on pound Aussie. Next, we're going to talk about gold. We may do gold and silver. Maybe I'll throw, maybe we won't look at silver chart, but I'll throw it in here as well. And gold is interesting, right? So gold is making all-time highs, right? You can see blah, 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 what I told you before, bottom left, top right, gold going up. Perfect, easy to understand. However, as we retested our previous highs, we did not violate it, right? Giving us a double top, which is a counter trend trading signal, or signal for a bearish reversal. Doesn't mean you need to trade it, especially with something that is in a heavy bull trend and has kind of the fundamental factors in its favor. But it is a sign that we may see relief. And the question is, why did that double top form? Well, my opinion is this. It's profit taking, right? Again, like I told you before, people have made a lot of money. At some point, people are going to cash out. Doesn't mean they're going to cash out all of their position, but they're going to pay themselves for their hard work. And when price gets to certain levels, certain psychological levels, like all-time highs, right? That's a good point where people are like, I'm going to take a little bit off just so that I can ensure that I made something. That is something that's normal. What happens after that is we see, again, the buying pressure slow down because a lot of new buyers don't want to buy at all-time highs. A lot of previous buyers are becoming sellers, and then there are some sellers sprinkled in there as well that are like, hey, this is a good place to get short. But we see relief, we see a pullback, we see a retracement, and those retracements come back to a certain level where buyers are like, hey, it's cheap again, I should buy some more, and then it recycles the process of buying. Now, I mentioned that gold has a fundamental backing as well, and to kind of, again, put this in the most simplest form possible, we've spoken about tariff threats. We know that Trump has implemented tariffs or issued tariffs. We know that Thursday there was a new thing that came out that said every country that imposes taxes on U.S. imports, tariffs coming your way as well. It's like Oprah, right? You get a tariff, you get a tariff, you get a tariff. Everyone gets a tariff, right? And because of that, there are some concerns about a global trade war, right? So when people are concerned and people are scared, what do? You run to the safe haven, and gold is a nice safe haven. Now, I would tell you this. Silver is kind of it piggybacks gold. You can look at the silver chart on your own, but silver piggybacks gold a little bit for a few reasons. And one of them being that, well, silver is cheaper, right? I'm a hard asset investor in both. I remember when I first started investing in gold and silver, right? The plan was to invest in gold, and I realized like, oh man, gold costs a lot of money, but I can buy this much more silver with that same amount of money. And for a lot of retail traders, they're doing that, especially with kind of a trend going back to hard asset buys as well. So keep an eye on silver for a similar, I guess, kind of move to gold, because a lot of people are seeing it as a cheaper gold equivalent. So back to the charts, the technical side of things. Here's what we have here. We have a pullback happening on gold, right? We talked about rejection candles before, right? You can see this nice green guy a couple days ago. Nice bearish rejection, meaning that the bears, or nice bullish rejection, excuse me, meaning that the bears pushed down. The bulls rejected it back up. If we look to the left, we had something similar here in the opposite direction. So this is a nice little structure swap or ice zone where price action found resistance, and then it broke above, and now we found support, and now we're coming right back down to that level. So we go down to a 4-hour time frame, gives us a clearer view of that. You can see this rejection candle here. Again, I'm going to kind of isolate just the single pin bar, right? Again, you can look left and see what happened before. This is a decent area to look for buying opportunities. Same thing as before. We want to see where we want to be predictive in our analysis. We want to be reactive in our execution. So wait for a buying signal. Lastly, we're going to take a look at the S&P, right? So doing some stock stuff or index stuff, I guess you can say. Indexes are just full of stocks, right? Stocks index, same thing. I like this formation for a breakout. This has the scent. If you smell, I don't think I did it. I tried to do the rock thing, and I think it just made me look stupid. Editor, edit that out. I'm the editor, so maybe I won't. Well, who knows? This has the scent of a potential bullish breakout lurking. Now, I'm going to go to a line chart just to make life a little bit easier here, and we can see, right? What I'm looking for is this, right? We've had this move of we kind of pushed up, we retraced, and then we pushed up, and then we tried to retrace, but we've been consolidated really at the top of this range, right? So we're seeing the buying pressure, right? If we can imagine, right? The buying pressure came right here as we retraced. Price action came, held at a previous high. If the sellers were really interested in kind of making a move here, we would have saw this, right? Retrace to at least a similar area, if not more, right? But we didn't. We saw the buyers push up a little bit more. So I look at this as kind of like a war where like they're gaining ground, where they line in the sand is right here, and then they kind of gain some ground and pushing it back up, and then everyone else advances, or like an offside trap in soccer, something like that. And now they're protecting this level. And the fact that we have this tight consolidation at the highs, this is not quite an ascending triangle, but really ascending triangle-ish. And I would expect a breakout to come here. So watch out for a breakout here on the S&P for you guys that are buyers. Again, there are 3 ways to trade breakouts. One is before. We're not really at a position right now to do it before. The before is you probably wait for like a pullback here and try to get involved here in advance of the breakout. Another one is the during. So if we do break out, either a buy stop right here so you can get involved on the way up, or wait for confirmation as far as like the break and the close to really know that, hey, we have breaking out and we haven't broken out. We haven't done any type of like weird false breakout and rejection. The last one would be, this is my preferred one, breakout and pullback, where I wait for confirmation of the breakout. I wait for the next pullback and then like look to get involved in that next move up. So hope you guys enjoyed the vid. Hit that like button before you go. Again, it seems like a really little thing to do, but it really does support the channel, helps us grow, helps keep me motivated to pump out content every week, and I give you guys a lot of content. And if you have any questions or comments, leave them in the section below or hit me up on the socials. Got to take my kids to church. I will see you guys next time. That computer guide link is in the description box below as well if you want to learn about what it takes to build a trading computer or what parts you need, as well as get a cool little discount if you do want a trading computer. So check that out, and I'll see you guys next time.
I want to be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.